Hey, welcome back. It's Jason Waltrey here. Existing home sales in the US dropped for 4 consecutive months, but that trend may be reversing in the coming months because pending home sales in the US rebounded strongly in May, reaching their highest May mark in nearly 16 years. This is according to a brand new report from the National Association of Realtors, or NAR, who announced that pending home sales, which is a measure of contract signings between a home buyer and home seller, those climbed unexpectedly by 8% this May. This month-to-month increase is the highest May since 2005. To be honest, I was surprised to hear the news that pending home sales actually increased in May, and also the street was expecting a 0.8% drop. Contract signings rose in all major regions in the US from the prior month and last year. This was driven mainly from a surge of over 10% on a month-to-month basis in the West and the Northeast. This is quite the turnaround because, as I reported last month, April pending home sales decreased 4.4% from the previous month. In addition, NAR reported that contract signings increased 13% compared to May 2020, which is quite remarkable. This is because last May was just after the stay-at-home orders were lifted and our housing market was in full swing. So that's how pending home sales compared to last year. But for those who know me, I like to compare stats before this pandemic hit. So I actually found a really good graphic here that I wanted to share with you today. This is compliments from the National Association of Realtors, or NAR. And as you can see here, pending home sales have more or less been on a downward trajectory since around September of last year. But the reading of May of 114.7 is still higher than before this pandemic hit in early 2020 and for all of 2019. And by the way, I closely follow pending home sales on a monthly basis here and report this to you guys because pending home sales is a forward-thinking indicator of closed home sales in the months to come. So in other words, this 8% increase of pending home sales could mean that home sales could accelerate in the coming months. This is because it takes approximately 1 to 2 months from when a contract is signed to when the home sale is finalized. Lawrence Yun, who's NAR's chief economist, stated the following: May's strong increase of transactions following April's decline, as well as a sudden erosion in home affordability, was indeed a surprise. He's actually 100% correct because home affordability hit its lowest reading in over a year as home prices surged to record high levels, yet household incomes decreased 1%. Lawrence Yun went on to say the following: the housing market is attracting buyers due to the decline of mortgage interest rates, which fell below 3%, and also from an uptick in listings. In my opinion, the increase of listings or housing inventory has been underreported. A lot of people are not hearing about this, but if you follow the channel, you already know that housing inventory in the US has been increasing for 3 consecutive months, and that equates to a 20% increase from February 2021. And in fact, NAR is forecasting that more housing inventory may be on the way, in part due to the wind down of the mortgage loan forbearance program. To me, it makes sense that as more and more people end their mortgage loan forbearance programs, then more people will list their houses for sale. But so far, the numbers are extremely low, and let me explain. According to the Mortgage Bankers Association, or the MBA, out of all the homeowners who have ended their mortgage loan forbearance so far, only 7.5% either refied or sold their houses. So in other words, the forbearances has not caused a significant increase of housing inventory just yet. Meanwhile, just over 2 million homeowners remain in forbearance, according to the latest stats from data analytic giant Black Knight. So I know a lot of you want to know, how will home prices change in the months to come? Lawrence Yun added that home price growth will steadily moderate with increased supply, but a broad and prolonged decline in prices is unlikely. However, if a reduction occurs in some markets, home buyers will view the lower home prices as a second chance opportunity to get into the market after being outbid in previous multiple bid market conditions. Regarding home prices, there's a common misconception that real estate agents want home prices to increase forever. And I think a lot of agents would agree with me on this, but we would love to have our home buyers have more options of houses to choose from and less competition from other home buyers. I personally have buyers who have been waiting for months to find the right house, but it's very challenging given the fact we have a lack of houses available for sale. Our housing market in the greater Sacramento area is so competitive that one of the challenges that I've never faced in my 8-year career as being a real estate agent is trying to book an appointment to view the house. So if a house hits the market on a Thursday, I have to reach out to the agent that day or Friday in order to book an appointment. If I don't do that, oftentimes the house is completely booked. There's no more showings for the remainder of the entire weekend. I have never seen this in my entire career as a real estate agent. What I personally would love to see is inventory to increase in order to have more options for our home buyers and also to stabilize home prices. And speaking of sky-high prices, the much anticipated S&P Case-Shiller Home Price Index for April was just released this week, and that index was up over 14% from a year ago. This is the largest gain in their almost 35-year history. Additionally, their home price index surged 2% compared with the previous month. That makes it the strongest March to April increase in their entire history. I'm hearing a lot of people compare home prices right now to 2006, and CoreLogic had a very good breakdown that I wanted to share with you. So they said, compared to the prior peak in 2006, the 10-city composite is now 19% higher, while the 20-city composite is 24% higher. However, keyword there, however, when the two indices are adjusted for inflation, the 10-city index is still 6% below its 2006 peak, while the 20-city index is 2% below the previous peak. On a national level, home prices are 35% higher than their previous peak in April, at least according to CoreLogic. So Las Vegas and Chicago remain below their previous peak, but in contrast, Denver is now 89% higher than its 2006 high. That's followed by Dallas, Texas. However, when adjusted for inflation, home prices in the US are only 6% above their previous peak. Speaking of home price growth by city, for the 22nd consecutive month, Phoenix, Arizona had the highest home price growth rate out of the 20 cities that CoreLogic tracks. So home prices there surged 22% in April, which is the fastest rate since February 2013. San Diego, California followed closely with a 21.6% increase, and Seattle was in third place with a 20% increase. In addition, all 20 cities experienced double-digit increases of home prices. However, Chicago and Minneapolis had the lowest home appreciation rates out of the 20-city index. In addition, San Francisco County and the city of San Francisco had a relatively flat or declining prices over the last year. And here's what CoreLogic had to say about home prices for the remainder of the year. So ultimately, while slowing home price growth has been anticipated, the continuing pressures on prices will likely persist throughout 2021 and keep the price growth at double-digit rates throughout the remainder of the year. The National Association of Realtors had this to add: expect continuing solid price gains in the upcoming months. Some calming of the market is only expected to happen in late autumn of this year and into 2022. Home price growth will be in single digits in 2022. We will have to see about that. More inventory will show up as home builders ramp up production and from the winding down of the mortgage forbearance program. Also, some investors who could not evict due to federal law may now decide to unload later this year. So I'd love to hear your thoughts regarding these two predictions here. Do you think that's accurate? Do you think we'll have single-digit home price growth rates in 2022? Will investors sell their houses once the eviction moratorium ends? Comment below. And if you got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. And also consider subscribing as well if you haven't done so already. I post videos about how this pandemic is affecting our housing market. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day. Look forward to seeing you on the next video.